the financial markets are just a never-ending, drama series. It just never ever ends. Because here we are, we've seen a lot of stuff happen that people wanted to see happen, right? People wanted to see inflation coming down. Inflation seems to be coming down, but the market never stops finding something to argue about or debate about. So we see inflation coming down, and now unemployment rate is on the rise. It's like we just swapped out one dramatic piece for the other. But here's the thing, guys. The unemployment rate rising we knew that had to happen. We knew that had to happen for the Fed to start cutting rates. But what's the big debate, right? Why did unemployment rate needs to start going up for us to cut rates? Well, because the interest or the inflation largely has been contributed to by a very strong jobs market, especially, services, right? People, if you have a really strong jobs market, what happens? I'll show you what happens. If you have a really strong jobs market, wage growth is very competitive and very aggressive. And again, I say this every time, for the people who are getting wage increases, obviously that is a positive thing. But for the average consumer going to the grocery store and they see prices going up, why are the prices going up? Well, because the Fed's printing a lot of money, but also because businesses are raising people's wages. And when you raise wages, gosh, that's a tongue twister. When you raise wages, people have more money in their pocket. They go spend more, prices go up. And guess what? They need more wage increases to combat the inflation. So it's the cycle, right? The spinning wheel of wage growth that does contribute to the inflation story. So we're seeing inflation coming down because wage growth is slowing, because the labor market is not so red hot anymore, right? For people looking to find a job, it's been harder in the last few months, right? Unemployment rate has been rising, so finding a new job has been harder. Openings in the US for jobs have been going down. We've discussed this many times. Refresh the page. So job openings have been going down. So the point is here, inflation is coming down overall. We get inflation statistics this week, by the way, which is going to be huge. But it's at the potential cost of a slowing labor market. And some who are more bearish would even argue at the peril of the labor market. People who are very bearish on the economy are arguing that the Fed has remained too restrictive for too long. They're saying interest rates being this high is going to really seriously hurt the economy, and things are going to slide much further. The economy is going to slow much more. Jobs data is going to get much worse. And there's a fair case to be made that unemployment rate typically trends in one or the other direction. Right now, let's face the facts. Unemployment rate is trending higher. So if unemployment rate is rising and it is expected to continue to rise, the question is, did the Fed wait too long? That's the new debate. The new debate is, did the Fed wait too long to cut interest rates? They haven't cut yet, right? The expectation is for them to cut in September. But the debate now is the Fed behind the curve, right? It's kind of like, let me think of an analogy. I don't have a good analogy. I'm thinking of, like, let's say you have a river stopped up with a dam, right? If the dam is intact, this is not going well. I give up on this analogy. My point with this is basically, if the economy is already sliding and they start cutting rates, it might be too late, because then the economy is going to continue to slide. if you're behind the curve and the economy is sliding too fast, too soon, and you haven't cut, remember that there is a lagging effect to interest rate movements. If the Fed cuts rates, it's going to feel the effects later on. So if the economy is already breaking and they haven't cut rates yet, will it even matter if they cut rates in September? Now, if you are nodding your head to all this and you're like, yep, that's how I'm feeling, I'm thinking that the economy is going to slide much further and we're going to enter a recession, then you may be more in the camp of wanting to buy the Japanese yen or short this rally. Now, I'm playing devil's advocate because I'll tell you what, I don't think that the economy is falling into peril. I actually think that this has been a nice buy the dip opportunity. I am long.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Now, why? Why am I long? Well, I'll give you my breakdown. So if I go over to the Edge Finder, we go to top setups page. SPX was a bullish reading, came down from there. By the way, the commitment of traders data showed huge buying of the S&P 500 last week. Did you guys see that? Look at this. NASDAQ buying, closing shorts, buying long. SPX closing longs, but massively closing, covering short positions. The NASDAQ was a killer last week. Nikkei, they went long. The Russell, they massively covered short positions last week. So look at what big money did, guys. Look at this. Let's go look at the Russell because this is so interesting. Last week on the Russell, which is small cap to mid cap companies in the United States, they had a pretty big short position prior to last week's trading. But if we go look at the Russell, what this is telling us is that big money was short and then covered their position last week, or covered a big chunk of their position. There's still plenty of short positions as well, but look how big money played that beautifully, right? Big money short into the sell-off, covered their positions. That's overall, in my view, pretty bullish. And when we take a look at the commitment of traders data, we see there was a lot of buying of gold, right? Actually, this one's kind of confusing. They closed long positions and they closed short positions. Technically, they closed less short positions and closed a lot of long positions. So you might say that's bearish, but you also have to remember that the overall number of contracts traded on the long side for gold is massively outscaling short contracts. So on a percentage basis, they closed a little bit of the percentage longs and they closed a good chunk of the percentage of bearish positions. The way to read this is basically they're still very long, right? And when I say they, what I'm talking about is banks, hedge funds. We can see gold is the number one positionally bullish symbol on the commitment of traders data. So anyways, last week, guys, I got long the S&P 500. Last week, I got long a couple different things. SMH, I got a long position on that one going. S&P 500, SPY, got long on that one. I am looking for gold setups, and look at gold this morning, guys. Beautiful. Little bit heartbroken for me because I was looking for this entry here, but looks like the market ripped without me. So what do I do in this situation? I stay as patient as possible, and I say, if this thing can take out those highs, I'm a buyer on pullbacks. By the way, I've got so many things on my watch list this week. This is going to be a crazy, crazy week in the markets. You've got retail sales numbers. You've got some company earnings that are really important. You've got CPI and PPI. I mean, this week is massive. I know I've been saying that all the time recently, but it just feels like every week is a massive week. Last week was kind of supposed to be quiet, and then the market sold off on Monday following the jobs data point on Friday. Anyways, this week is actually going to be very, very big. We have some really big earnings. Walmart, I don't know that there's ever been a greater anticipation of Walmart earnings than what we have, I believe, on Thursday. Do we have Thursday earnings? Yes. Thursday morning, guys, low key is a very, very important earnings report for Walmart. Okay. Walmart, you might say, why Walmart? I never go to Walmart. I'm too bougie to go to Walmart. Well, then you just don't like low prices. What? Anyways, Walmart is really important, okay? Because Walmart they've got their finger on the pulse of the consumer, right? The performance of Walmart's earnings will be looked at similar to like retail sales, which retail sales this week, really important. Walmart's earnings will move the whole market likely because everybody's worried, are we going into a recession? Who better can answer that question than the people who have direct data points on the consumer's activity, right? You want to say there's a recession going on, I'm looking at company earnings more than anything else. Company earnings, I could tell you, based on A1 Trading, our company, I could tell you a lot about the trading community because we have stats on the trading community. We have activity in terms of what people are clicking on, what people are watching, how our live streams are doing compared to their usual performance. We have a lot of stats on that. Walmart has some insane stats on the state of the consumer, which the consumer is the economy, right? All right, so gold's getting a very bullish reading. We can break this down. The commitment of traders data, I already showed you that. Looks really strong, right? Seasonally, it's a positive month. August is a really positive historical month for gold. If we go to the seasonality month of the year trends data, and we sort by gold, look at this, guys. So August is a historically bullish month for gold. Now, September and October and November are not. So that's maybe where maybe we see this last one run up through the highs on gold this month. We still have 20 days or so. And then maybe we chill on the buying, right? Because then we're looking at a seasonally weak period. But don't sleep on seasonality. It has been so powerful in recent years and has actually led to my best trades. If you wanted to break down like one of the simplest indicators that I use, it is the seasonality chart on the Edge Finder. It's been insanely accurate in recent years. Some of you guys might remember the S&P 500 trade that I took in the November, I took it like November 1st last year, which was literally like the low of that pullback. And then we ripped higher into the new year. One of my best, I think it might be, it's like tied with the recent trade I had on gold for the best trade I've ever had. That trade just ripped and ripped and ripped. We trailed stops for weeks on it. It was like that one trade paid for the whole year of losses. And, that wasn't my only winner. So it was like, that was massive. Gold right now is still seasonally a strong period of the year. So that gives me some confidence that we could see prices continue to move higher on gold. Now, what I'll be looking for is ideally a break of structure to the high side, and then just looking to trail stops and continue it. Maybe we see a nice run through the rest of the month to the upside, especially if concerns about the economy are still lingering and, maybe the idea of several rate cuts comes back into the picture. That's going to be positive for gold. Yields are slightly higher here this morning. TLT is also down this morning, just a little bit. Bitcoin flat on the day. Ethereum slightly positive or up 4% today. That's pretty good. Euro, pound. Look at euro. Euro looks like it wants to try again at this level. I actually like this quite a bit for a possible break and retest entry. We tried here on the euro against the dollar. We tried to get through these highs. big rejection came into the picture here. So I actually like this from a possible break, retest, entry. So that's another one I believe is on the Edge Finders watch list. So I like that one a lot. Look at that. Gold up almost 1% on the day. Meanwhile, stocks are dipping into negative territory. Russell's down a little bit. The Nikkei is up almost 1%. VIX up 1.62%. But I mean, look at the VIX, guys. This volatility seems to be falling off a bridge right now. Look at that. Oil's up 1.3. Look at that. Oil's up. Is there anything going on in the Middle East today? Like, is there some geopolitical concerns going on? Because that seems possible. Just had a bit of a spike here on the open. Yeah, 930 chart. How are the individual stocks doing out there? Tesla's down today. Adobe down. Netflix, CrowdStrike. What's up today? Palantir. Did you guys see Palantir? This thing's such a beast. Palantir ripping 3.5% up. Nvidia's up 2.2. How are semis doing? Semis flat on the day. I am long semiconductors, SMH. We'll see how that one wants to play out. Yeah, look at that. NAS and S&P going into negative territory on the day. Had a really strong rip last week from the lows. The S&P 500 from the lows, made a move of upwards of 5% during the week, which was very, very strong bounce back. We'll see if that wants to continue this week. Obviously, I would like it to for my trades, but I've also outlined in my overall kind of broader strategy for, the rest of 2024, 2025, is if we do get larger discounts in the stock market, I've marked out levels at which case I will start to actually deposit and dollar cost average on some stocks that I really like. So I'm open to whatever happens. If the market rips through the highs, then great, I'll trade it. If the market drops through the lows here, then this is kind of also positive because then I can go shopping for some stocks that I like. A personal, strategy that I've discussed a lot on my channel recently is that when I'm buying individual stocks or, buying and holding stocks that I like, I only ever do that when the market itself is seriously down. And what I look for is a 10+% correction in the S&P 500. Middle East retaliation likely to happen anytime soon. I get that. And I think everyone knows that that's a possibility. But what I was asking about is, are gold and silver up at all this morning because something actually happened, right? There's the fear of something happening, and then there's the actual something happening. So if there's any, let me know, guys, if you see anything on the, Middle Eastern conflict front. If there's anything that has actually occurred, let us know. Yields are slightly down. Very interesting. So anyways, back to the top setups page for a second. I'm going to take out the minor currencies and let's see where we're at. So dollar yen, dollar Swiss franc. Let's look at those charts for just a second. So dollar yen is actually up today. Dollar Swiss franc is also up today. I've discussed this on the Swiss franc, possibly getting a little bit of a hedge position going at the 50% retracement level. So if we see the dollar against the Swiss franc strengthen a little bit more up into this region, I'm considering a little bit of a short position on this. Now, some of you guys will remember I took this trade to the downside here and it worked out really nicely on this. And I was able to trail stops. I got out of my position on the break to the upside, but I'm still cautiously bearish on this one because the price action looks really bearish, but also it's a bit of a hedge to the recent risk off concerns that we've seen. it's hard to deny that when we take a look at the commitment of traders data, institutional money has been greatly decreasing yen shorts. And if there's still some appetite to do so, same thing with the Swiss franc, by the way, there's a demand to buy back the risk off currencies of the world, right? CHF, JPY. If we see any suspended uncertainty in the global situation about the global economy, I'm not talking about geopolitics, which yes, that is a component, but if you're actually talking about the real forces that drive longer term trends, it's going to be the economies of the world. If the economies of the world are really slowing, if that is what you think is going to happen, then maybe you want to be long things like CHF, JPY. If you are not thinking that's going to happen, maybe you're thinking, maybe I'll stay long other currencies, or even more specifically, maybe you're long, indices, or maybe you're long Bitcoin or whatever. Two different sides of the coin. I lean more into the thinking of, I think the economies of the world are going to hang in there, in which case that makes me a little bit more bullish on stocks, makes me more bullish on other currencies. But as a bit of a hedge, in case I'm wrong, if I was to take a more risk off trade, it would be waiting for solid setups on the short side of things like USD CHF, USD JPY.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.